everybody. Brandon Cobb with HBG Capital here. Thanks for tuning in to today's episode. We're going to go over cash flow, specifically for construction companies, building companies, developers, house flippers, especially if you're in the real estate space, or even if you're not in the real estate space. Anybody who is executing or building or managing multiple projects out of the same bank account, you know that if you're sending money into that bank account, that you're having Peter rob Paul, and it's got this domino effect. Projects are robbing each other. We used to have this problem, and now we've got the model that works, and I want to share it with you. But before we jump into today's episode, if you've been interested in learning more about getting passive income direct to your bank account from recession-resistant real estate, schedule a call with us. We'd love to just hop on and get to know you and figure out if we might be a fit for you. All right. So jumping into today, in the past, the way we ran things were we basically had two bank accounts. We had a holdings bank account and we had a construction bank account. And so we had all of our operating expenses running out of the same account. We had all the subscriptions getting paid. We had salaries getting paid. And then with our construction company, we had all of the projects being run out of that one account. And it was, quite frankly, it was a really, really big disaster. Now, fast forward today, I've got more bank accounts set up that I can keep up with. And we have a CFO and controller that is, finally taken over what I've done, which is move money between all these accounts and make sure that it's allocated properly. And I want to share with you exactly how we set this up. So in the past, the problem we were having was lots of money coming out of the same operation account, and then all the money that gets funneled to the construction account going out to the different projects. And if you're in this space, you know that when you have multiple projects being run out of the same bank account, when you send money to that account, if someone doesn't cash a check immediately, or the vendor that you sent money to that account for doesn't immediately get paid out of that construction account, you get this Peter, Rob, Paul effect. Right? Contractor takes a month to cash a check for a specific project. That money accidentally got sucked up into another project. It can create a pretty big nightmare for you. And, we lived this. So what we did to manage this was we set up a bunch of sub accounts underneath our construction account. And what this did is we assigned projects to all those sub accounts. So, for example, right now we've got about 5 different, syndications going on, one fund. And so all these different accounts have money that's specified to it. So we have the actual LLC account that is set up. This is where you would raise money into that account and keep it completely separate from all of your other business expenses. And when you raise per project, you'd have syndication 1, syndication 2, syndication 3, syndication 4. So all that money stays separate. And then the best way to really run an efficient cash flow contractor payment process is to have sub accounts underneath your construction company. Now, this is just for, people who have the construction company set up. If you're paying just one builder to do everything, again, you better make sure that he's actually using that money for the correct itemizations. Because if you're just paying one builder to build 50 homes for you, well, how do you know that money went to its proper allocated spot, right? At the end of the day, if he's using that money for something else, that's a huge issue. So that's the goal here. We want to make sure that the money that goes to the account is used for the correct itemizations that the account's getting invoiced for. And so in this case, what we do is we have our construction coordinator work with the bookkeeper to create all the invoices that the contractors sit in for that construction account. Let's call it syndication 1. And then syndication 1 will invoice the actual syndication entity that the money was raised for to begin with. So, for example, right now we've got a project going on, called Nashville NC Fund. So we've got a bank account where Nashville NC Fund is set up. All the money's raised into it. We have a construction account that says Nashville NC Fund 1. And we've got other construction accounts that are also set up that are separate. All the projects that are run through Nashville NC Fund, those invoices go to Nashville NC Fund construction account. And then Nashville NC Fund construction account invoices the Nashville NC Fund LLC for those. And this is where the magic really starts to happen, and what really how you can avoid the cash flow issues and the Peter, Rob, Paul stuff from an individual syndication standpoint is you have your CFO or controller set up where they will move money right out of that LLC into the construction account and then immediately pay all the invoices. So the money literally flows from the LLC immediately into the construction account, and then all the invoices are paid via ACH deposit, not check. Check is again, you have no guarantee that that vendor can cash that check immediately. You want to make sure the money goes in and out as fast as humanly possible. But once they move that money to the construction account, then boom, invoices automatically get paid. The money flows out. This is the best system that we've come up with thus far. I know, I know some other builders out there that literally have about 40 different bank accounts set up, and they'll do a bank account per project. And it just becomes an absolute nightmare, especially for tax purposes and accounting. It's just too much to keep up with. So we group the projects together. That's how we're raising money for all the projects anyway. So the money is actually allocated per project, and that's how we're currently doing it. So keep all the finances separate. Make sure that you're setting up individual accounts for your business as well. If you haven't listened to my previous episode, I did an episode on like profit first and how to set up all the different accounts so that you've got your operations account, your income account, your tax account, your profit account, your owner's compensation account. And that way you've got all the money that's not just sitting in a bank account where you're literally using how much money is in your bank account as a gauge on whether or not your business is doing well. So best system we've used so far. I might do another episode on like cost codes to get even super granular per project to track, your budget overages and underages. Maybe I'll even, share our cost codes that we're currently doing with our projects. So you can kind of dive in, but I wanted to get this out there because I've been talking with some other builders who weren't implementing this. And when I shared it, they were like lit up and excited about it. So it doesn't matter if you're a builder, this will help in your regular business too. So hope this helps. Again, book a call with us if you're interested. We'd love to get to know you. Till next time.